Is going to be very different than what I normally do in this place. And it's going to just be a lot of reading, quite frankly. But, that's what this particular situation calls for. So there is an article published by Ramesh Chima in news, Tech. Anyway, it's called 15 Best Humanoid Robot Stocks That Will Ride a $30 trillion opportunity, according to Morgan Stanley. That's the title of the deal. And what we're looking at here is the companies that you wouldn't be thinking about in terms of humanoid robots. We know, of course, Tesla, we know Figure One, we know the companies that are making the robots or the companies that are talking about making robots, even Google and Apple and others that might get involved in the humanoid space. But what about the secondary companies, the companies that are going to be using the bots to save millions and billions of dollars in their application? Well, that's kind of what Ramesh is getting to here. So he says, in this piece, we will take a look at the 15 best humanoid robot stocks that will ride the opportunity. He says, with the age of artificial intelligence seemingly upon us, the world has changed. AI, a technology exclusive to science fiction in the past decade, even as recent as 2 years ago, is now reality, even though in its highest form, artificial intelligence is far from being a reality. Similarly, while factories in the 20th century had to rely on workers for most of their production, now automation is in full swing. Nowhere is the impact of this clearer than in the factories of Elon Musk's car company. The electric vehicle billionaire has often described his attempts at establishing a viable production base for electric vehicles as hell, production hell, of course, famously, and now he believes that the future of the world lies in the hands of humanoid robots. So much so that Musk believes that by selling $1 trillion of humanoid robots each year, his company can reach an unbelievable market value of $25 trillion. Right now, it's valued at $708.7 billion after having lost 8.96 this year. Musk, 8.96%, I'm so sorry. Musk aims to have the first version of his firm's Optimus humanoid robot in a small-scale production early next year, and then starts, he says 1,000 or so, 1,000, couple, 3,000 maybe, and then start selling it to other companies in 2026. A simple humanoid isn't what one of the world's richest men is talking about, though, since the key to his plan of selling robots is autonomy. This is the key valuation driver, believes Musk, as he shared in his second quarter 2024 earnings call. And it takes the valuation, I think, to some pretty crazy numbers. ARK Invest thinks on the order of $5 trillion. I think they're probably not wrong. This is the author of the story. And long-term Optimus, I think it achieves a valuation several times that number. ARK Invest Cathie Wood hedge fund, which has $11.2 billion of investments under management, is also quite bullish on humanoid robots. She calls humanoid robots a generalizable robots. Wood's firm believes that they represent a $24 trillion revenue opportunity overall. Elon, of course, thinks it's that's in revenue, yes. This opportunity is split between household and manufacturing robots, with the investment firm outlining that even a 50% take rate coupled with a 50% productivity boost could lead to a $7.1 trillion revenue opportunity for humanoid robots. And of course, as we talked about at length yesterday, this is something, or was that yesterday? That was, yes, yesterday, CERN Basher's video. We talked about how this could actually wipe out the US debt and maybe the world's debt as we become an extremely wealthy world. Looking ahead, ARK Invest believes that humanoid robots will have grown to 10% of the number of humans by 2030. So you got 10%, so 10%, 800 million bots by 2030. That would be something. I'm not figuring 800. Am I figuring 800 million? I think it's possible. That would be a stretch, but it could happen. If Tesla is making 100 million a year and a few other companies are making, 50 or 60 million a year, and some are making 10, yeah. But that would be a pretty good number. She says, talking about Kathy Wood, in an era where cheap robots and human form factors have begun to populate households to address 1/3 of household chores and be an attractive purchase because of the time they help people save. I'm not sure how many household chores they're going to save. Maybe babysitting and walking the dog. But man, how many household chores do we have now? Not that many. I think it's going to be more about things that we'd like to have somebody come in and do for us, but we don't. I've talked about the shoulder rubs and the foot massage. Kathy Wood and Elon Musk aren't the only ones who are convinced about the potential that humanoid robots offer. Another big believer is the investment bank Morgan Stanley. It believes the biggest potential of humanoid robots is in the cost savings. Well, duh. As per analyst Adam Jonas' estimate, these robots can bring about cost savings of $500,000 to $1 million per human worker over a 20-year period. These savings will come at a hairline of a fraction of the cost, with the bank's estimates that the robots will cost $10,000 to $30,000 each. And I think that's probably correct. I think some will be under 10,000. The investment bank's estimate also believes that by 2030, America could have as many as 40,000 humanoid robots helping humans. Talk about the other end of the scale. 40,000 would be my number from Tesla alone in 2026. A lot of people don't agree with me, but 40,000 by 2030 is just crazy. I mean, you've got all these companies in the US that are already, and in China, that are already planning to make them. If you had 1,000 each from 40 companies, it'd be 40,000. Anyway, talking about in 2026, talking about overall usage, the industrial and other uses of humanoids can lead to a wage impact of 1 billion, or how about 1 trillion? These wage impacts grow as we move further down the future and peak in 2050, when the bank believes that the humanoid population will be an unbelievable 68 million. Boy, still small numbers, with an impact of 30 trillion for that number. Of course, the robots that the bank has envisioned aren't your everyday run-of-the-mill equipment. They will use artificial intelligence, naturally expands the investment opportunities. As per analyst at Stanley, the list of potential contenders for investment as humanoid robot stocks include companies making the generative AI that will power the robot's brains, the mechanics that make their bodies run, and the battery storage needed to power them. I would call it battery as opposed to battery storage needed to power them. Further development in these three areas will be key to achieving humanoid commercialization. Let me see. What companies can I think of that do all of those? Companies that make the generative AI, the mechanics that make their bodies run, and the battery storage. Wow. Who would that be? How about the manufacturing capability? If you thought that we were done with trillion-dollar estimates for the humanoid robot industry, you'd be wrong. Another such estimate comes from the management consulting firm Roland Berger. It believes that if the sector scales according to optimistic projections, then by 2050, 50 million humanoid robots could generate 1.5 trillion in revenue. It's not going to be 50 million humanoid robots in 2050. It's going to be 1 billion humanoid robots in 2035. However, the firm does caution that this optimism is contingent on, heavily dependent on, technological progress in the regulatory environment. As of course, there'd be regulatory scrutiny of humanoids for various reasons, but I don't think that that's going to slow things down much. According to Morgan Stanley's, here's their methodology. We use Morgan Stanley's humanoid 66 stock list for our list of the biggest beneficiaries of the human robot race. This list is divided into 3 categories: humanoid enablers and beneficiaries. And then, 3. Yeah, those are the 3 categories. Humanoid enablers. I'm not sure what they mean by that. For these stocks, we also mentioned the number of hedge fund investors. Each time we're going to give you the number of hedge fund investors and also some of the things that are being said about the stock in each case. All right, so here we go. Number 15 on the list is Mercedes-Benz Group. It's not known how many people and how many hedge funds are following it. Mercedes-Benz Group is one of the most well-known car companies in the world. This makes it unsurprising that the firm will be a beneficiary of humanoid robots. This is because car manufacturing is heavy manufacturing industries where workers often face safety risks when dealing with large and heavy objects. By using humanoids, Mercedes-Benz Group can reduce employee risk and improve costs along with production efficiency. I think that's all true. As a whole, the firm's hypothesis depends on robust economic growth and more so than other companies like Toyota. I don't know why more so than Toyota. This is because Mercedes sells high-end vehicles that require more consumer discretionary income. Additionally, it relies on consistent and stable energy to run its factories, a weakness that was made clear in 2022 when they produced when their parts when made clear in 22 when Mercedes-Benz Group produced parts in advance to mitigate impacts to gas supplies from Russia. All right, so I think that's an okay analysis, not great, but Mercedes-Benz, for a bunch of other reasons besides the ones they mentioned, would benefit. Then we got BMW, which is, I can't spell it, Bayerische Motorenwerk. Anyway, BMW is another German automaking giant. Like its peer, Mercedes, it benefits from using humanoids by saving on costs, etc. While the estimates for humanoids in our introduction stretch out to decades in the future, they're one of the big movers in the space. The firm plans to use humanoid robots in its factory in South Carolina this year in 2024, and it made a statement. I think that's with Figure. They made progress on the front in August when it tested the first one in a German factory and used it for vehicle chassis manufacturing. Yet, since the firm still generates revenue from selling cars, any weakness or unexpected costs don't do well for the shares. So yes, I think these are good examples, and you could probably take all the car companies maybe as a group, and they would be some obvious beneficiaries, but so would all major manufacturers. I mean, even Boeing, maybe they would do way better with robots than with the current humans that are working there. JD.company, they have 52 hedge funds watching them. JD.com is a Chinese e-commerce company that sells products such as appliances, electronics, and care products on its platform. It operates its own warehouses, which also exposes JD.com to become a beneficiary of the growth of humanoid robots. Robots have been shown to be quite beneficial for the logistics industry, with Jeff Bezos reducing its click-to-ship time in warehouses by 78% by using them. By the way, they don't have any humanoids at this point, or very few if they have any, but they have lots and lots and lots of robots. In fact, at this point, I believe their robot population is very close to their human population. JD.com is an early mover in the broader robotic space, and it opened an automated warehouse in 2018 that was designed to ship 200,000 packages daily by employing a mere 4 people. 4 people to do 200,000 ships a day, packages a day. Not sure how much the humanoids are going to help. As a whole, JD.com is vulnerable to economic downturns due to its consumer-centric nature. All right, Ariel Investments mentioned JD.com in a note. Here's what the fund said. We initiated a position in China-based technology firm JD.com. The brand has long been known across the region as a superior online shopping channel due to its unique first-party model and unparalleled fulfillment service. Yet a challenging macro environment drove shares lower as the shoppers began seeking bargains. In response, the company made significant investments in elevating its third-party merchant platform to enhance its variety of product offerings. All right, so then we've got Tenaris SA. Number of hedge funds investing, 22. Tenaris is a Luxembourg-based specialty steel company that sells heavy-duty products such as steel pipes and casings to the oil industry. It also sells pipes used in car manufacturing and other industries. The nature of its products and manufacturing operations means that Tenaris is particularly suited to benefit from humanoids due to the robot's weightlifting strengths and no susceptibility to injury when compared to humans. On the business front, they're doing well, okay? If you want to learn more about Tenaris, I'm sure you can look that up. They also benefit from long-term contracts on this front. Here's what management shared during their earnings call. This quarter, we renewed our long-term contract for Shell and ExxonMobil, We were also awarded the supply of casings and offshore pipe and castings by Woodside for Trion. In the second half, we will begin deliveries of coated line pipe, etc. See, these notes don't, unfortunately, I should have read these in more detail. They don't really involve much of the reasons. All right, so I'm going to skip the notes. Number of hedge funds investing in Schlumberger Limited. You've heard of Schlumberger. They have 66 hedge fund investors here. They're one of the largest oil and gas exploration and production equipment providers in the world. It provides it with a dual front to benefit from humanoids. On the first front, they can become a humanoid robot manufacturer by leveraging its experience in oil field services market. On the second front, it can also use humanoids to augment its product portfolio by using them to provide new service to existing customers. Oil exploration is one of the most dangerous jobs in the world, and currently Schlumberger uses robots to inspect oil wells, as one example. Additionally, the unsaturated nature of its industry, where only a handful of companies operate, mean that they could gain market share by exploiting rivals' weaknesses. All right, so I think that's enough of that. Halliburton, they have 38 folks covering them. I'm sorry, not covering them, investing them, hedge funds, investors. Halliburton is another key player in global oil fields. Okay, I think we're getting the point. It is focused more aggressively on robots than its peers. It announced a well construction automation contract in 2023, holds the third highest number of patents globally for underwater oil exploration robots, and kept up the pace in 2024 by signing a deal for a tractoring robot called MicroRig. Like other well services firms, Halliburton stock performance depends on the healthy oil industry, of course. Okay, then we've got Baker Hughes, got 43 hedge funds investing there. Baker Hughes is the third oil, gas, and exploration production company that they think will benefit from humanoid robots. However, unlike its peers, more than 75% of their revenue is ex-US, which allows it to maintain a diversified customer base. Okay, so Baker Hughes has an opportunity with robots as well. Then you've got 𝐄𝐦𝐚𝐢𝐥 International. They have not available as far as how many hedge funds are investing there. They are a logistics company, one of the biggest freight and logistics companies in the world, operating out of Switzerland. It does supply chain solutions for other businesses in addition to its own. And of course, that's where the humanoids could come in a big way. Could benefit from humanoids in its own warehouses, just as it benefits from using picking robots right now. It can also generate value by offering a one-stop humanoid solution to businesses that often seek to outsource this kind of work to others. All right, then we got DSV A/S, whoever that is. Never heard of them. They're another global logistics company and shipping giant headquartered in Denmark. Air, sea, land, and specialized freight delivery. The firm partnered up with universities back in 2019 to understand the impact of collaborative robots on warehouse operations, followed up in 2020 by opening a Norwegian factory with robotic storage. It kept up the pace in 2024 by partnering up with a robotics company. These developments provide them with a stable platform that they can leverage to expand its humanoid robots in the future. Number 6 on the list, Deutsche Post AG. One of the biggest logistics and shipping companies in the world with more than 500,000 employees. It's a German firm, benefits from the strong demand for industrial robots in Germany. They have been also looking into the keep up with investor expectations. The firm has been focusing on fulfillment metrics and delivery times. On the robotics fronts, they have become a global leader in the freight industry. As per its mobile robots partner, Locus Robotics, they crossed 500 million warehouse picks through robots in May of 2024. This comes after the firm had expanded its focus from picking to sorting in March 2024 by partnering with an American robot company. Then we've got number 5, Amazon.com. They have 302 hedge funds following them or with money invested. They are the biggest e-commerce company in the world, of course. operates close to 200 mega fulfillment centers worldwide, many in my neighborhood, which offers its wide base to benefit from humanoid robots. The firm has adequate technology base that it can leverage to introduce humanoids to its warehouse. Amazon currently uses Kiva mobile robots in its warehouses and has cut down clicks to ship times by 78%. Its partnership with Anthropic also provides it with a large artificial intelligence platform to make up the brains of humanoid robots as envisioned by Morgan Stanley. It's also an early mover in the humanoid space. It started testing these robots in 2023. It relies on e-commerce for most of its revenue. Its performance depends on economic conditions. It could see additional tailwinds from humanoids through a reported new business division and targeting supply chains and logistics. I think they could also benefit from robots in the future by selling them. McDonald's, okay, they've got 63 hedge funds invested in them. McDonald's is a global leader in the fast food industry. Of course, this is due to their extensive consumer-facing nature. They have, the firm is used their cash to open its first robotic restaurant in Texas in 2023, making an early mover. McDonald's Corporation global operations footprint offers a large market and stability. I'm sorry. Expanding automation to its stores in September when it introduced the kiosks. We've all seen the kiosks. All right, this is okay, moving on to Domino's. Domino's, well known among American pizza chains. Oh, it's followed by its investors, has 40 hedge funds investing. It's one of the biggest players in the food delivery logistics industry, which has also allowed Domino's to experiment with robots in its delivery chain. They first used robots to deliver pizzas in cities such as Berlin, and customer-facing nature of Domino's business means it is likely to focus more on humanoids for a smooth in-store customer experience as well. Additionally, these humanoids in its kitchens will allow Domino's to maintain its existing flow models and use machines to introduce efficient workers. As a whole, its investors focus on same-store sales growth, and international expansion. Domino's would be similar. Domino's is our sales mix from Uber grew to 1.9% for the quarter. The incrementality of Uber sales continues to be in line with our expectations. Our comp tailwinds were partially offset by a higher carryout mix. Shifting to the U.S. count, all right. So they would also benefit from all kinds of automation, both of the on the delivery side as well as the making of the pizzas themselves. General Motors and Ford are the last two. I think it's really obvious. We've already talked about the automotive space. They're saying that General Motors in particular, somewhat familiar with the competitive advantages. It's the only car company in the world where humanoid robot has been used in space. General Motors in space. I guess it means in there. I don't think it means in outer space. General Motors partnered with NASA, yeah, okay, to develop the Robotnik in 2007. Well, yeah, okay. I don't think that helps us much to understand it. But General Motors has to catch up with Tesla. Yeah, this could be devastating to General Motors, as if Tesla has their own manufactured in-house robots doing half, let's say, of their human work, and General Motors is still using union employees for that. It'll be game over. Let's say on Ford Motors, it also aggressively targeted robotics development, which opens up the path for it to become one of the biggest beneficiaries of humanoid robots. They put it at number 1. While Tesla's robot development plans are new, Ford partnered up with the University of Michigan in 2021 to build a $75 million, 134,000 robotics development facility. This facility also focuses on bipedal robot development, which is the precursor to the humanoids. They have another serious player in the bipedal industry, as well as it has partnered with Agility to create value additions to autonomous cars. Agility's bipedal robot called 𝐒𝐦𝐧𝐝𝐚𝐲 can hook up with cars to benefit from their map data for navigation, and it's also designed to carry groceries from a car to the doorstep. This could expand the ride-hailing business model of an autonomous car to delivering groceries to the door. Ford says our vehicles are increasingly general purpose computers capable of delivering the type of application environment as you well know. All right. So it's at the end, it says that Ford is the biggest beneficiary, in their opinion, of the growth in humanoid robots. That's Morgan Stanley's opinion, but our conviction lies in the belief that some AI stocks hold greater promise for delivering higher returns and doing so within a shorter time frame. Again, I believe that what is being said here is that Morgan Stanley, and what Morgan Stanley's saying, what the author of the story is saying, is that outside of the actual folks like Figure and like Agility, the ones that are going to be manufacturing these robots, that these are some of the downstream folks that are likely to benefit, which are not really on the radar, if you will, like the providers of the software, the providers of the hardware, the manufacturing capability, like a Tesla. Tesla, of course, would be so far off the top of this list in terms of the primary beneficiary, because not only do they have the software, not only are they making the hardware, not only are they very likely far ahead in all aspects, they also have the AI, they also have the factory capacity, then they also are going to use it in their own factories, not only for cars, but I'm sure right across the board for everything that they make, including the building of the robots themselves. So I hope that was helpful, useful, interesting. If it was, hit like and subscribe and all that kind of stuff. And then joining Patreon would be a lovely thing to do on a Sunday afternoon. Hope you enjoy your football. It's been great talking to you.